Well, we thank you for joining us here on the Market Day Report, and this is a rather exciting day as we have some big moves in the markets here, led by the soybeans, but boy, the wheat markets have been getting after it as well. And here lately, the corn market has been picking up. Now, part of it's related to our weekly export sales numbers and overnight export sales that came out. So let's walk through these here one by one, and we'll talk about this. Let's start with this corn market. We currently have the December corn now showing a gain of 10.25 cents, and we're priced at $4.15.5. $4.15.5. We were barely trying to clear $4 here just a couple days ago. So it was a real struggle to break through that, and now that they did, we're showing a double-digit gain. Now, the nearbys are leading the charge. I will add that as well, and that can be a bullish indicator, some traders will tell you. If you look at the soybean trade right now, that November contract is now showing a gain of 27.25 cents at 11.06 1/4. And I believe our deliveries on the soybeans this morning went down to one contract. So that says a lot right there, because here a few days ago we had over 500 contracts posted for delivery. It's like nobody wanted the beans. And now we've had basically a 40-cent rally or so in soybeans in about 48 hours. And now everybody wants the beans. So only one contract posted this morning. I thought that was pretty eye-opening. January soybeans now, with these quotes provided by Bar Chart, are quoted at 11.07 3/4. So we're 21.5 cents higher. That is just quite a move that we have been seeing taking place in the soybeans. We did some checking this morning, and we have to go all the way back to the summer months of 2016. In other words, over 4 years ago, before we find prices at this level. And at that time, I believe on a continuation chart, the soybeans actually got a little over $12 that summer. And so right now, we don't have much for resistance above us up until you get to that $12 mark, perhaps. Some analysts have been saying that. We bring in Brian Hoops of Midwest Market Solutions. Would you agree with that, Brian? What do you think about resistance levels overhead? I mean, it looks like the sky's the limit here.
Yeah, good morning, Marlon. It kind of feels like the sky is the limit this morning with sharp gains yesterday. We're adding to those gains today. I think we're going to run into some, minor resistance right at that $11 mark, and we kind of blew through that this morning. And so now, if you look at continuation charts, there's kind of a cluster beginning about 11.77 up to that $12 mark, but between this area and 11.70 or so, there's not a tremendous amount of resistance. We just don't spend a lot of time in that area, and so we may find, technically anyway, an easy path to continue to move higher. Fundamentally, we're watching South American weather. It's fairly dry in parts of southern Argentina. Not a lot of rain in the forecast there, and of course, next week you have a supply and demand report that could show a smaller corn and soybean yields, and that's providing underlying support for these markets as well.
So apparently the market has to ration supply. That's going to be its job now moving forward, according to what I've been picking up here lately. But if that's the case, I mean, how low can you realistically go when it comes to your ending stocks estimate from USDA?
Well, yeah, they were 270 million bushels last month. There's some private estimates that are coming out already below 200 million. It looks like the USDA probably is too low on our export profile. If yields come down, that'll shrink up the balance sheets even tighter. And what really could send this market higher is if weather is adverse in South America and we start to see more business flowing out of the U.S. over to China. Instead of buying from South America, China buys from the United States. It'll tighten our balance sheets even further. So there's kind of analog years that we've talked about before, 2003 and 2004, where soybean values rallied all the way into about April timeframe when we bought quite a few acres from the U.S. farmer, planted more acres in the spring time frame, and we may be on path to do the same thing where we kind of rally all through the winter months.
So now it's going to be a struggle with the corn for acres in the spring. Looking at the wheat, they don't want to be left out. December Chicago wheat, 16.5 cents higher at 622.5. And in the the Kansas City market here this morning, you have December 16.5 higher at 576.25. And Minneapolis wheat, you currently have December up 13 at 570. Wow. Okay, Brian, we'll come back in a moment. We'll take a look at our livestock trade after this. Well, the Dow continues to surge as well. We're not only sharply higher in the grains, but look at the Dow futures. December now 645 points higher. Wow, you have to really look to find anything bearish today. 28,380 is now what we stand on the Dow index for December futures. Wow, that's a big gain. On the other hand, on the other side of the coin, you have the dollar going the other direction by 700 points at 92.710 on the December U.S. index futures. And looking at live cattle trade with the quotes provided by bar chart, December now 55 cents higher at 108.42. On the feeder cattle market this morning, you now have January 52 cents higher at 135.67. Now hold the phone. They're not all higher. You have April and May actually a little lower next year. They're down 17 cents out there. Lean hogs have turned higher in December, now up 80 cents at 67.15. February up 82 cents at 67.82. Biggest gainer would be May of next spring, up $1.10 all the way up there at $74. And we bring back Brian Hoops here to talk about this a little bit. How in the world are the livestock able to gain when you have grain and input costs rocketing higher like what they are today?
Yeah, I'm surprised, like you are, that the feeder cattle are holding in there with soaring corn values. Usually that would put some pressure against feeder calves. You know, it wasn't unexpected to see cattle open stronger. In fact, they gapped higher in December after some cash trade in that 107 range. That only left us with, a little over $1 basis from the futures, and we need to put in a little bit more premium than that. And the market's been trying to do that this morning with expectations that next week cash trade will be stronger again. So futures market feels like it's on solid footing from the cash standpoint and the live cattle, but yeah, the feeder cattle, I wouldn't be surprised by the end of the day if they don't start to weaken up as long as corn stays this much stronger.
Brian, on the wire this morning, it appears that the only bids out there on some cash cattle are around 107 per hundredweight this morning. Asking prices, I know yesterday we heard 110 or better. Now this morning I'm hearing asking prices maybe at least 108 to 110 or maybe better. But haven't really seen anything shake loose yet. Everybody's just kind of keeping their powder dry here in this cash cattle trade.
Yeah, some of the light trade that was noted yesterday was 107 in the South, about $1 higher than the prior week. We did hear some 160, 164 drafts. That was about $1 to $2 better. So the direction is higher so far this week, although the volumes have been very limited and very light.
Yeah, I guess Kansas did have about 11,000 head that sold, but it looks like maybe we might have a little action to go yet. The lean hog trade, we were talking about the fact that the December contract is still far below what the hog index is, right?
Exactly, yeah. That's one of the things that's really supporting this market is the strength in the cash hog market, supporting the index, and December futures having that discount, as you mentioned. The index is up around 72.90 or so. So, the $5 discount should be kind of a supportive feature for the futures.
All right, thanks for the time, Brian. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. Lots going on. We'll keep on top of it.